Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is August 11th, 2025. I am Luna.
I am JPMorgan.
U.S. equities did extend their rally. Not a huge shock given the momentum lately. The Nasdaq climbed almost 1% to another record. S&P 500 up 0.8%. And it was clearly tech and communication services leading the charge. Mostly strong earnings, plus, continued hope about Fed rate cuts.
And Apple, that really caught my eye, jumped over 4%. President Trump mentioned a new $100 billion U.S. investment from them. What's the market really reading into that? Is it just Apple or something bigger?
Good question. Beyond just Apple, what's fascinating is how it fits a larger pattern. This $100 billion, it could almost be a template, for how big companies handle political pressure to invest domestically. It sort of blurs the lines between corporate strategy and national policy, so it's an interesting precedent. Meanwhile, as money flowed into those riskier tech plays, the usual safe havens eased off.
Right.
Gold dipped about 0.65%. Rising real yields make holding gold less attractive, but Bitcoin, totally different story, rallied almost 4% to around $122,000, getting close to all-time highs again.
Wow.
Oil, though, went the other way. Weakened a bit more. US WTI down about 0.7%. Partly tariff worries, partly optimism about a potential US-Russia deal on Ukraine.
So a clear risk-on rotation then.
Yeah.
Okay, shifting gears from the immediate market reaction. Let's talk bigger macro stories. The Nvidia and AMD China chip sales thing, that sounds unusual. Paying the U.S. government 15% of revenue for export licenses.
It's highly unusual, absolutely. And analysts are really tuning this over. Is this 15% levy like a not bad outcome for them to get back into China, which was a huge market, 24% of revenue? Or is it just wild, as some say, like monetizing national security?
Monetizing national security, yeah.
It's not just a tax. It's a novel way to handle geopolitical rivalry through business. Could absolutely set a precedent. An export tariff.
An export tariff, right. Huge implication.
Definitely underscores the U.S.-China tech tension.
Okay, from tech geopolitics to something closer to home, mortgages. Bill Ackman's proposal to merge Fannie Mae and Freddie Mac, he argues it could cut mortgage rates, find synergies, and the Trump administration might eye a public offering, valuing them near $500 billion.
Yeah, connecting that to the bigger picture. While it's speculative for now, it signals housing finance reform is back on the table. Fannie and Freddie basically backstop the whole U.S. mortgage system. So any real movement there
huge impact
could seriously affect mortgage rates and the whole mortgage-backed securities market. It's a massive financial and political issue.
And finally, leadership. The next Fed chair, Treasury Secretary Bessent, gave some hints, said the new chief needs to examine the whole organization, stressed independence, even with Trump calling for cuts. Seems like a balancing act.
It really does. Suggests the administration wants to look like it respects Fed independence, even if they have preferences. These comments just reinforce what the market's already thinking. The next year will probably be more dovish or maybe reform-focused.
Okay.
Adds another layer of uncertainty for policy in, say, 2025, 2026. The market's definitely hanging on every word here.
So, with all that going on, what should we be watching for this coming week? What's key for our listener?
No question. It's the U.S. CPI report for July. That's out Tuesday, August 12th. Okay. Core CPI, the expectation is up about 0.3% month on month. That would nudge the annual core rate up towards 3.0%.
And if it surprises to the upside?
Well, that would directly challenge the market's bets on a September rate cut. Could easily spark some volatility.
Right.
But if it comes in weaker than expected, that would likely boost those rate cut expectations earlier, deeper cuts, and reinforce the current bullish mood.
So Tuesday is the big day, sounds like. Market holding its breath. Anything else besides CPI?
Oh, yeah. Keep an eye on producer prices midweek, then late week consumer data retail sales, Michigan consumer sentiment. Also, the expected extension of the U.S.-China tariff truce. That's also Tuesday the 12th. And, of course, the Trump-Putin meeting on Ukraine. That's set for August 15th in Alaska.
A lot going on.
It is. Futures markets are pricing in like a 90% chance of a September cut, so there's optimism. But, investors need to stay sharp. The margin for error feels pretty thin right now. Inflation surprises, trade policy twists, geopolitics. Things could sour quickly.
So pulling it all together, what does this mean for you, the listener, trying to navigate this?
I think the next week is really pivotal. It's going to test this upbeat market story. Sure, a Goldilocks outcome, inflation cools, Fed cuts are coming, could push things higher. But prudent portfolio management probably calls for some vigilance, maybe even some hedges right now.
So as you adapt your strategy to all this unfolding news, especially with the potential new Fed chair maybe shaking things up, consider this. In a market driven by hope but facing so many potential curveballs, what unexpected event might actually redefine optimism in the months ahead?
You've seen the headlines, but what really moves your portfolio? Money.ai scans 1.3 million signals a day, earnings, sentiment, macro shifts, and turns it into one personalized briefing focused on your holdings. No noise, no guesswork, just what matters. Money.ai, know what moves your money.